Interestingly, the major market for how to earn more money online and online forex trading market is divided by location. There are foreign exchange markets in London, New York City, Singapore, Tokyo, and many other locations worldwide. Currency trading is speculating on currency prices to make a profit potential. Traders make bets on the growth or decline in the value of one currency relative to another by exchanging one currency for another. Forex, or currency trading, is also called the foreign exchange, FX, or just currency. It is a global market where all the currencies of the world can trade with each other. It has the most money in it any market in the world. This market is great because it has a lot of buyers and sellers and competitive prices. The difference between the bid and ask price is not very big. Due to the unpredictable performance of other markets, Forex trading, investing, and management are all growing. What is Forex, or currency trading? Buying and selling of currencies, foreign exchange, or Forex, is a very interesting subject. It means knowing what to buy and sell and when to do so. Lastly, knowing how many people buy and sell on the Forex market helps put everything in perspective. Traders try to make money by betting that the value of one currency will rise or fall against another currency. Say, for instance, you buy US dollars and sell euros. In this case, you are betting that the dollar's value against the euro will increase. You will make money if your bet is right and the dollar goes up in value. When you trade Forex, your goal is to make money when your bets are right and limit your losses when the market goes the other way. Leverage can be used in the Forex market to make bigger profits or losses. History of the FX trading. Evidence of currency trading and exchange dates to 259 BC in ancient Egypt. By the late Middle Ages, monies were traded through foreign banks. In the 15th century, Florence's Medici family founded foreign banks to enable textile commerce and currency exchange. Amsterdam had a Forex market in the 17th and 18th centuries, with English and Dutch agents trading. In the 19th century, modern trading took shape. Around the 1850s, firms like Alexander Brown & Sons became leading currency merchants in the U.S. By the 1880s, new competitors entered the market. The creation of the gold standard monetary system in the 1870s was possibly the biggest event in currency trading. Before World War I, there was less control over international trade, and the war prompted countries to forsake the gold standard. From 1899 to 1913, foreign exchange holdings rose 10.8%, while gold rose 6.3%, highlighting the importance of the nascent Forex market. By 1913, approximately half of the world's foreign exchange was traded in pound sterling, but only 2 brokers worked in London. The busiest trading centers were Paris, New York, and Berlin. In 1928, foreign exchange trading was important to London's financial functioning, and trade began to resemble its present significance. In 1944, the Bretton Woods Accord was signed, allowing currencies to vary 1% from par. During Nixon's presidency, the Bretton Woods Accord and fixed exchange rates were repealed, resulting in free-floating currency. The ineffectiveness of the Bretton Woods Accord and European joint float prompted Forex markets to close from 1972 to 1973. 1973 marked the beginning of the current Forex market, when state control of foreign exchange ended and a free market began. Reuters replaced phones and telex with computer monitors for trade quotes the same year. Reuters pioneered electronic Forex trading before the internet, which acted as a real-time closed network for dealers in the mid-1980s. Each day, $4 to $5 trillion are traded in the Forex market, making it the world's largest financial market. How to make money trading. Advantages of the price fluctuations. Through the foreign exchange, investors can trade in almost any currency in the world Forex. If you want to make money in foreign exchange, you should know you are taking a risk. You are betting that one currency's value will go up compared to another. Ignore the short-term chaos and don't make any investments until it's over. Even though the market is overreacting, staying the course is a good strategy often used when the market is unstable. When stock prices are low, it's a good time to buy more. Who can trade? Everyone. Doctor, lawyer, engineer, student, farmer, etc. Traders used to learn more on their own. At the very least, if you want to work for a reputable financial institution or company, you need a 4-year college degree. Most traders have degrees in math, especially accounting, business, finance, banking, economics, or business. Most of the time, you can buy stocks online through the stock market. Anyone with a brokerage account, robo-advisor, or employee retirement plan can get to the stock market. Put your money to work in the stock market, even if you don't consider yourself a serious investor. To a large extent, it's doable by everyone. Why trade? Financial freedom, pay loans, debts, vacation, retirement plan, etc. Once you identify financial freedom, you may work toward your goals. Everyone's wants and aspirations are different, and that's crucial. Regardless of your financial situation, set life and general goals that cost money. Automated investing has benefits. You needn't transfer money to savings or investing. This keeps you disciplined. If you have ambition and patience, you can trade for a living, even with little to no money. Trading can be a full-time, part-time, or additional income source. When can you trade? 24 hours, 5 days. Sydney, Tokyo, London, and New York sessions. There is no dominant exchange in the foreign exchange industry, but rather a global web of exchanges and brokers. The Forex market hours depend on when each participating country trades. The 4 Forex sessions are Sydney, London, Tokyo, New York. Each day, trading begins in New Zealand, but Sydney's first significant session is named. When one major Forex market closes, another one opens. Some times of the day are busier than others, so keep track. In the next parts, we'll discuss the 3 most crucial sessions and when to trade them. First, look at each Forex session's open and closing times. Things needed for successful trading: internet device, internet, broker's trading platform, and knowledge. Effective day trading involves a collection of tools and services. Some essential tools you probably have. Day traders enter the financial markets online because of modern trading. A phone is helpful in case you need to call your broker, and you'll need a computer or laptop to trade online. Tools you may not have: a direct access brokerage, real-time market data, and a trading charting platform are included. All these tools and services are broken down to see what you need to start day trading successfully. Active traders need several tools. This includes basic gear, software, and desk accessories. As one of the most well-known Forex traders ever, George Soros kicks off our ranking of the finest Forex traders in the world. Stanley Druckenmiller, Bill Lipschutz, Andrew Krieger, Paul Tudor Jones. Mike Marcus is also famous. Reasons to trade. International trade happens because of 5 main things: differences in technology, differences in resources, differences in demand, economies of scale, and government policies. Most of the time, each trading model only has one reason to trade. So that's all for it for today's video. I hope you all like this video. Please let us recommend some topics you want to see in the video in the future. Don't forget to hit the like button and share it with your friends and family if you like the video. We will be back soon with a new video. Till that, keep supporting and take care.